One topic I do not cover on this channel very often is how to invest in stocks that are generally underperforming. Intel is a nice example of that. They just have not done well recently at all, but there is still a viable strategy to invest in companies that are underperforming. You may say, why would I want that? Well, it's generally because they have a lot of upside and they have the baseline for what you would want in a company to make a huge upside. And we can see that if we look at the financial side of things. So Intel right now is doing roughly 53 billion in revenue. That is, believe it or not, a lot. They were doing 80 in 2021. So obviously we're down from there. But at the same time, if you know, so I always use AMD on this channel. I understand the company very well. That's even a company people would say is underperforming. AMD, off of about half, I think they're doing about 28 billion in revenue per year. They're valued, I think, just under $200 billion market cap. So a company that's doing nearly half amount of revenue per year, who is just making an average profit margin, is worth almost double what Intel is right now. So you would expect that if they could make what AMD was doing, of course, AMD is still, believe it or not, a well-run company. They would be, triple the valuation, quadruple, something like that. So, and you can see it in other stocks like a Dell. Dell is a good example of what you're kind of looking for in these stocks that are underperforming and the upside that you can have. As we see Dell, obviously there's numerous things that are going right for Dell right now. A lot of the products they make are perfect for data centers, and obviously those are incredibly hot right now. So there's almost a perfect storm for Dell, but at the same time, they've done much, much better. So even if we look at their financials, which aren't super impressive either, doing somewhere in the high 80s, low 90s, billions of dollars in revenue, they're making okay profit on it, but it's not even that impressive. But because they were doing so poor, so poor, over the last 5 years, they're up 348%. That is substantial. When you're looking at a stock that is significantly underperforming, now I'm not talking about stocks that are maybe really small, don't have a baseline. I'm talking about established, large stocks that just are making revenue. Maybe it's declining, it's going flat. But if they were to turn things around and even make, half of the profit of an average competitor in their space, they're doing much better. And their PE, still with Dell, their PE is still low and there's still upside here, in my opinion. Now, that's where it gets challenging, though, is there's numerous stories of companies that have continued to underperform. And in my opinion, although this is definitely a viable strategy, it's slightly, let's say significantly more risky than buying in a stock that's maybe a little bit higher PE, but, has performed very, very well over the last 10 years. Think of something like a Mag, maybe not all the Mags, but like an Apple, right? Very, very few people that are really into stocks would say, yeah, in 7 years, I think Apple's going to be flat or lower than it is now. Could it be? Absolutely. But Google, Apple, Meta, Nvidia, if you asked most people that paid attention to stocks, if you thought they would be substantially lower or flat in 5 to 7 year time period, assuming there wasn't a recession, almost everyone would say no. You could ask quite a few people about Dell and Intel. Certainly Dell, if you're looking at Dell, let's say 2017-ish, 2018-ish. I mean, it did go flat for a number of years in this time period, but there would be probably a lot of people not super high in them. And honestly, if you're doing the math on something like an Intel, you'd probably say, hey, there's a good chance it just goes flat. My money doesn't do anything other than maybe the dividend we get. However, the chance that maybe it gets bought out, you get a decent upside there, or that if they do somehow turn things around relatively soon, there's going to be a 300 to 400% increase you could see quite rapidly. I've already mentioned this isn't necessarily my investment strategy of choice. If I were to invest in a company that's underperforming like this, I would prefer something like Dell, which looks like they've been able to turn things around. But like I said, there's absolutely numerous reasons you can point to. When we look back at something like an Intel, you can point to numerous things. You'd say, hey, they're going to get bought out, where there's lots of rumors of that. Their chip fabrication, that's going to turn things around. There's only 3 players in the game really, and one of them's barely playing. Samsung, Well, actually, both of them. Samsung and Intel at this point are barely playing, and TSM's just taking everything, which is why I love TSM. But if that works for Intel, it's so huge because that's another competitor in the space. If they can do it even decently, so there's upside there. They still have the brand awareness. Everyone knows who Intel is. I was talking to someone like 4 or 5 years ago about, he didn't know anything about stocks, but I'm like, I really like AMD, and believe it or not, even though AMD is underperforming, you're still up from 4 to 5 years ago about AMD. And I'm like, man, I do not like Intel. I'm not a fan. AMD's gonna do. He's like, I don't, dude. Who the heck knows who AMD is? Intel. Everyone knows who Intel is, and not a guy who knew stocks at all. And it's hard because when you hear a brand that's running flat, but it has such a large name brand where there's just, like I said, there's numerous things you can point to for these stocks to find justification for investing them. And they can if they turn things around, there is substantial upside. People are really have been cheering for it. And so that's part of the reason it declined so quickly. Let's just pull it back up real quick. Is because despite the fact that they were having lackluster quarters substantially, there was still, like here, obviously they had 27, but they came back up. There's optimism and there's hope and there's belief that Intel can turn things around. So until you start seeing some, year after year of just getting crushed, and historically Intel's run more flat over the time frame they're getting crushed. Yeah, they were flat, then they were up, then they were down. I mean, we're basically just flat from 2010. I mean, obviously highs in 2000 were pretty crazy, but this is a company that has supporters. There are maybe some of you watching this video has believers in it. Maybe you don't own it, but you wouldn't be surprised if they turn things around. So this is the sort of situation. If I was to take that quote unquote bet, obviously it's not a bet like it is gambling, but it's a bet like, hey, the risk reward ratio lines up for this. I think there's a good chance Intel can go up to 60. If they just get some momentum, I think there's a good chance they can hit 80 a share if they actually start 80, 100 a share if they really start to turn things around. And, there's a good chance it goes flat, whatever. I'm willing to take this risk. I'm willing to take this bet. I'm willing to take this investment. That's totally fine. And honestly, it's a viable strategy. And there's certainly situations like a Dell, for example, where you would have done very, very well. So, anyways, that's all I really got for this video, guys. If you enjoyed, I appreciate if you'd like or subscribe. Daily stock content on this channel, and I'll catch you next time.